Good morning. It's the VSA Morning Miner on Friday, the 10th of February. And I, David Scribner, with Paul Rankin, and it's yet another beautiful sunny day. But will that spread through to the weekend?
And will it
Paul, how are
continue
you?
into the metal markets too? That's what I want to know as well.
Anyway, sir, I see an announcement that Fulcrum have announced an IPO. I think 17 million shares at 17.53 million. I think Panther Metals owns 20%.
Yes, all those things are true. Fulcrum Metals is a pending new AIM IPO with a first trading date anticipated on the 14th of February. They will use that 3 million pounds raised in order to get exploration underway on Canadian properties, primarily in the gold space in Ontario and in the uranium space in the northern Athabasca Basin of Saskatchewan.
Indeed, interesting. I noted over the pond that there's interesting reserve growth for Barrick.
Barrick did replace 103% of their production in this past year per the announcement they put out yesterday. It's a proven and probable mineral reserves increased by 10% to 76 million ounces, and average grade in there right around 1.67 grams per ton overall. And measured and indicated resources stand at 180 million ounces at just over 1 gram average grade per ton in gold and 42 million ounces of 0.8 grams inferred resources. In addition, they mentioned their copper resources, which, including reserves, stand at 44 billion pounds at just under 0.4% copper in the measured and indicated, inferred 15 billion pounds at 0.4%, also as average copper grade.
You will be keeping an eye on Barrick. Also noted that I think Impact Silver are making an acquisition in Mexico. We've been keeping an eye on companies in that region and following them. How do you feel about that?
Impact Silver, it's a TSX listed boutique small scale silver producer. In other words, small scale or boutique, what I call companies which have production operations at less than, in my own rating, at less than 400 tons a day through the mill. And Impact is picking up Plamosis mine, which is a small-scale lead zinc mine in Chihuahua State that is owned by an ASX-listed company. It produced at a rate of 125 tons per day last year, but it is a high-grade one, over 10% in combined lead zinc, with reserves about 250,000 tons and another inferred amount of resources, which are a good 750,000 tons. $6 million, the purchase price of which $3 million is in cash and the remainder in Impact shares, and will give the ASX listed firm a 9.9% interest in Impact post closing of the deal. And the first things first for Impact Silver, besides making sure that the mill is suitable to continue producing, is to get some more drilling undertaken on the resources in order to move those into the measured and indicated and reserve category. And it is a quite good sized structure, of which the existing resources are only a small portion of the strike length. So interested to grow that resource base as well. Impact, in a comment for me, been around for a number of years, but has always struggled with making a profit due to the what you would call the just break-even grade for the existing Zacualpan mining district, the silver gold operations that they have. So this being much better returns per ton should improve the overall picture of Impact's revenue stream and working capital quite well if it works out.
Makes perfect business sense. Would it make it slightly less of a silver company because it's lead zinc, or is there a fair balance between the two, between the commodities?
The actual revenues generated by the Zacualpan operation are dominantly in gold. So it is, in fact, a gold company operating a silver by volume mine at Zacualpan. And then this makes them a polymetallic producer.
Very good. We spoke about Yellowcake yesterday, and Cameco came out with results.
Yes, that's right. Cameco Q4 results released late yesterday. Net earnings for the year 89 million and adjusted net of 135 million for the full year. Fourth quarter, though, was a net loss of 15 million with adjusted net earnings of 36 million. They delivered 25 million pounds of constant uranium concentrates in the year, but only produced on their own behalf 10.4 million pounds, which was in fact up 70% on 2021. That means that 15 million pound difference was Yellowcake that they had purchased at a profit on the spot market in order to deliver against their long-term standing contracts. They have restarted operations at McArthur River, and Cigar Lake had met its annual production target of 18 million pounds as well. Its fuel services division, which produces the uranium, fluoric uranium as the intermediate into making the utility reactor pellets, they had produced 13 million kilograms for a 70% increase year on year.
And finally, to wrap up, maybe we could just talk about Trafigura being caught in a nickel scam, maybe costing them something in the region of 577 million.
Yes, it's not a small loss that they'll be charging against the books in the 2022 financial year, and the loss of 577 million would be equivalent to more than 7% of its record $7 billion profit. So it's not a small scam, essentially, that appears to have been perpetrated on it by subsidiaries owned by the Indian Gupta family. That is the apparent evidence. So they will be taking legal action against those entities in order to get reparations or compensation. And the bottom line was that shipping containers that were taken in delivery purported to contain nickel concentrates arrived at their delivery point, but actually didn't have any nickel cons in them. So there's been some theft going on or intentional documentation fraud. So is what it appears to be. So we'll see how it plays out.
Extraordinary. Well, let's wrap up there unless you've got anything else to add. And if you do, please let us know. Otherwise, I shall wish our listeners a very good weekend.
That's more than long enough for today. So we'll see you on Monday.
Many thanks.
Mm-hmm.